Hey guys, Adam Rose, Vice President and Senior Loan Officer of Western Ohio Mortgage here in Sydney, Ohio. Today is another episode of the Mortgage Guy podcast, and today I just felt like I need to do some more product overview, not necessarily total overview or anything like that, but kind of our product offering, because I think some people can get confused sometimes on what's out there, what's available, and how we can help buyers, homeowners, and investors really reach their goals no matter where they are in the process. And there's not a perfect program for everyone, right? There's not one size fits all mortgage programs. If there was, there'd just be one. So let's hop in real quick. So again, I'm going to do a broad brush stroke of each program real quick, just to remind you of what we can provide and how it might be able to fit into your goals on what you're trying to accomplish in real estate. So whether it's investing or building a portfolio or just trying to find a place to live. So loan programs I like to start with the lowest down payments available, and we always go with VA, right? So VA is designed for veterans and active duty military service members. Often no down payment, right? And very, very flexible guidelines. The nice thing about VA, again, is the no down payment piece, and there's no monthly PMI, right? Mortgage insurance premiums or private mortgage insurance, however you want to call it, which is a big plus. Rates are pretty competitive. And if you receive VA disability of any sort, they will waive your funding fee. That's the one downside with VA is their funding fee is a little bit larger than the FHAs and the USDAs in the world. But if you receive any kind of disability, we can run and go get your certificate of eligibility from VA and see if you can get that waived, which is a big plus. So if you have the ability to go VA, that's numero uno, in my opinion, in regards to the benefit to the consumer. Second would probably be USDA. USDA also zero money down for rural areas. Again, the definition of rural for us is a little bit different than most, right? Basically, if the population is 20,000 people or less, you're probably going to fit in the USDA realm. There's a map out there you can Google, USDA eligibility map. You can plug in your address, check it out. But like around us, like Piqua, Troy, Dayton, obviously too big to go, but like Shelby County is 100% eligible. Logan County, Auglaize, Salina, Dark, all great programs, great areas for USDA. Very low PMI, 0.35%, and their funding fees the lowest out of all those government programs at 1% funding fee. And then we start looking at FHA programs, which are great. We use a lot of FHA, and it's not just because the rates are typically the most aggressive between all the programs, but they're a little bit more lenient in regards to credit score requirements as well as debt-to-income ratios. So if you find yourself in a sticky position where it's the house that you love and it might have been $10,000 or $15,000 more than what you could typically buy using other programs, FHA just kind of fits right in there. Funding fees 1.75%. It's right in the middle between USDA and VA, so it's good. But very minimal down payment of 3.5%. It's very feasible, and we're in a great time of year with tax season, and a lot of buyers that have multiple children specifically will get a sizable tax return. So I always encourage you, hang on to that money, because if you're in the market for buying a home, we can put that to work with FHA. We can put that to work with a more aggressive offer, and maybe pay your own closing costs or buy down or pay down debts to help you qualify for more house. So note to self there. And then we look into the conventional program. So these are the conforming loans that I'm just describing here. So conventional, ideal for borrowers with very, very strong credit. And they have decent rates and flexible terms. Nice thing about conventional is property requirements on a house are less stringent, right? So you'll see some homes that are listed as, say, cash or conventional. If it says cash or conventional, I mean, you really got to look at it because not everything will go conventional. So you got to be careful. But you can go as low as 3% down on conventional programs. Now, there are some lenders out there that create some like 1% down, no MI stuff, but it's a kind of a specialty thing. It's in-house because they're basically, I don't want to speak for all of them, of course, but a lot of times when you're doing a 1% down, 2% down, they're mixing the down payment assistance, and they're also possibly doing a lender-paid mortgage insurance premium where they're charging you a higher interest rate in order to cover that expense, but neither here nor there. Let's just talk about the conforming standards, right? So conventional 3% down and higher. PMI is risk-based. It's not like the FHAs and the USDAs where it doesn't matter what your credit score is. It's just a fixed amount. Conventional is risk-based. your loan to value or your down payment amount, credit score, debt ratio, those are playing a role in what your PMI rate is. I've seen extraordinarily low, like 0.12%, which is crazy low, all the way up to, if your credit score is in the mid sixes and you just have to go conventional, it's going to be pretty high. It'll be in the ones per month. So that's why, a lot of times we try to push those middle credit score borrowers more towards an FHA USDA loan because it is more beneficial to the buyer than a conventional program sometimes. Now, on the conventional side as well, there's a standard 97, which is a 3% down program, but there's also Home Ready and Home Possible. These are designed for first-timers. Home Ready doesn't require you to be a first-timer. You just can't have ownership interest in two properties at the same time. But the benefit of Home Ready and Home Possible is not just the 3% down, but sometimes the pricing's a little bit better. You might be able to get an eighth or a quarter better than a 5% down loan program if you didn't qualify for these Home Ready or Home Possible. Plus the PMI rate, the amount of coverage we have to get is reduced. So your payments are usually more attractive. Now, the challenging piece of it is they're going to calculate the income for both borrowers that are on the loan, only on the loan, okay? And you have to be at 80% of the area median income. In our area, you got to be in like that 65 to 73 range. I'll have to double check the guidelines there. Actually, it might be 73 to like 80-ish, but it depends where you're buying, right? So the AGI can adjust. So specialty financing, all right, so those are the conforming things that I wanted to hit and remind people of what we can do. And we can also do down payment assistance, all right? That's something that I do want to mention. OFA is probably the most common one, but we do have other options available depending on your situation. But we have great financing options there with down payment assistance programs. But specialty financing that not everybody does offer, I always need to touch on it. Renovation loans, right? So you're going to be able to finance the purchase and improvements all in one mortgage. We can combine that with VA Reno, USDA Reno, FHA 203K, and conventional home style renovation. We can do all of those, okay? Very, very popular program. If you find that home that, may not be up to snuff, whether it's just not meeting minimum property standards, or if you just have a wish list of items, whether it be, hey, I want a new kitchen, I want an addition, a new roof, furnace, whatever it is, it could be an option for you to attach or just do a renovation loan instead of your traditional conforming loans. We do new construction loans, which I won't go too far into, but we're quite aggressive in regards to your out-of-pocket expense. My typical, just to give you a broad brushstroke, we do a 2-time close. What that means is we close your construction loan, do your draws to your contractor, and then we do a long-term financing in the form of a refinance once your home's pretty close to being completed. But approximate out-of-pocket expense is about 8% of your total acquisition cost. Now, when I say total acquisition, I'm talking about if you're buying a lot and the cost of your construction. Combining those two together, approximately 8% of that is going to be used for closing, down payment holds, escrow holds, stuff like that. So that gives you a rough idea, at least, of what's going on. Every case is different. You can use lot equity if you already own your lot. A lot of cool options there. But FYI there. We do bridge loans, all right? So bridge loans are interesting. So let's say you're trying to sell a house and the house that you're offering on, that seller won't accept a contingent offer. A bridge loan could be an option. What it's there for is really to tap the equity of your existing property to either use for the down payment on the new one. We can use it to pay off debts and still qualify for the new one. The challenges that you run in with bridge financing is your debt ratio has to be quite strong, right? Because the whole purpose is to go non-contingent on the sale of your house. So we have to count your new house payment into your debt ratio like we traditionally would, but we also have to include your existing home and whatever the interest-only payment is on the bridge. So as long as you qualify, it's a great program to kind of bridge that gap to get you into that new house, that new contract, and remove the contingency option. Again, we're very flexible on it. They are interest-only payments. We do 6 months on our bridge loans, just FYI. We do reverse mortgages, which I am not an expert in, but in a nutshell, is for borrowers that are 62 years and older. You can use it for refinancing purposes. You can also use a reverse for purchase, which is really neat, which we can dive into that sometime on this podcast. We do offer HELOCs. I saw a local agent post about someone doing HELOCs, and them pretty sure they use the exact same funding sources we do, because we can use it on your existing home, right? We can do second homes. We can do investment property HELOCs as well. Even if the home is listed for sale or plan on being sold in the next 6 months, you can still do a HELOC on it. So contact us on that. We use our funding source through Figure and Nifty Door, all automated. And I've had closings in as little as just a couple of days from the time that you do your application. It's quite impressive. It's fully automated. We also do non-QM loans, which I've talked about before. There's solutions for your self-employed, your investors, non-traditional income earners, stuff like that, whether it's primary investment, vacation, whatever it might be. We got the bank statement programs. We got the I-10s. We've got the 1099 programs. We've got the DSCRs of the world for your investors. A lot of options. So I wanted to make sure I came on here and express that again to make sure you are aware of our full portfolio of products. And we also have a lot of other things that we provide, including helping people set up biweekly payment structures through GemCap Financial. We have a lot of relationships with title companies here locally that we've pre-negotiated fees down with to help save you a couple $100 on costs. We've got insurance options. We have a ton of partners on insurance that we'd like to send you out to. Again, your choice on who you want to use for insurance. Absolutely 100%. But if you do need assistance in that, that is something we can help with as well. And we also can assist with ADT set up and get discounts there. So if you're looking at getting the security stuff for your house, we can hook you up with that and get some pretty good discounts. So we have a whole slew of things that we can help you with. We try to be your one-stop shop for all financial services in regards to real estate. Minus I don't have a real estate company, which I'm not going to dive into. But there's not a single one-size-fits-all mortgage. Like I mentioned earlier, if there was, there'd only be one program. Our goal is to really find the solution for your goals, for the timing, and whatever it is that you're wanting to accomplish in your life or with real estate. And that's why we always say that we're the solutions expert. That's some of our commercials. We're the solutions expert, meaning we have to find an answer or a solution to your specific scenario, your credit background, your cash that you have, whatever it might be, whatever you're trying to accomplish, we're going to help you all the way through it. That's all I got for you guys this week. Remember, subscribe on YouTube. Check us out on Apple Podcasts and Spotify. We'll catch you all next week.